Welcome to our comprehensive technical analysis of Aimei Health Technology Co., Limited AFJK. As of December 31, 2025, AFJK closed at $99.60, capping off a period of extraordinary price action. This video will break down the key technical signals behind this explosive move, explain the underlying risks, and provide actionable insights for both current holders and potential investors. Whether you're a seasoned trader or just curious about the latest market phenomenon, this analysis will help you understand what's really happening beneath the surface of AFJK's parabolic surge. AFJK's current price action is nothing short of remarkable. The stock is trading far above all its major moving averages, signaling an extremely bullish trend. In fact, the price is nearly 5 times its 50-day average, a rare occurrence that highlights the intensity of the current buying frenzy. However, such a steep climb often comes with heightened risk. The Relative Strength Index (RSI) is deep into overbought territory, and the price is well outside the upper Bollinger Band. This combination suggests that while the uptrend is powerful, the risk of a sharp pullback or mean reversion is very real. Let's dive into the moving averages. The 20-day simple moving average (SMA) sits at $39.38, while the current price is more than double that. The 50-day SMA is at $22.73, and the 200-day SMA is just $13.78. AFJK's price is nearly 600% above its long-term average, a transformation from penny stock to momentum leader in record time. Such a gap is unsustainable over the long term, but it underscores the current market mania. The usual signals like the golden cross are irrelevant here. The stock has simply gone vertical. The Relative Strength Index (RSI) is a classic momentum indicator, and right now, AFJK's RSI is at 72.12. This means the stock is officially in overbought territory. While strong trends can keep the RSI elevated for extended periods, especially during parabolic moves, this is a clear warning sign. Buying at these levels means chasing a move that may be running out of steam. Traders should watch closely for any dip back below 70, as that could signal the start of a reversal or at least a cooling-off period. The MACD, or Moving Average Convergence Divergence, is another key momentum indicator. AFJK's MACD reading is an eye-popping 14.22, confirming the explosive nature of the current trend. The histogram is likely wide, reflecting accelerating momentum. Importantly, there's no sign of bearish divergence yet, meaning that for now the bulls remain firmly in control. However, traders should remain vigilant. Such extreme readings rarely last forever. Bollinger Bands help us visualize volatility and price extremes. AFJK is currently trading at $99.60, well above the upper Bollinger Band at $89.73. This is what's known as a 3 sigma breakout, a statistical outlier that happens only about 5% of the time. Such moves are often driven by high volatility, short squeezes, or major news catalysts. Historically, prices tend to revert back inside the bands, so this is another red flag for potential mean reversion. The Average Directional Index (ADX) measures trend strength, and AFJK's ADX is at an extraordinary 70.83. Readings above 70 are extremely rare and indicate a trend of nuclear strength. While this confirms the current direction, it's also a warning sign. Such high ADX values often precede a market climax or sharp reversal as the trend becomes unsustainable. Traders should be cautious. This level of momentum can't last forever. Understanding support and resistance is crucial for managing risk. AFJK's pivot point is at $106.76, with the price closing just below it, hinting at some intraday weakness. The next resistance is at $123.21, while the first major support is at $83.14. If the price drops below this support, there's a risk of a rapid fall toward the 20-day SMA near $40, as there's little structural support in between. These levels are critical for both traders and investors to watch. AFJK's beta coefficient which is nearly 0 and slightly negative. This means the stock's massive move is completely uncorrelated with the broader market. Whether the S&P 500 rises or falls, AFJK is moving on its own, likely due to company-specific events such as a buyout rumor, FDA approval, or meme stock activity. This idiosyncratic behavior adds another layer of risk and unpredictability. The stochastic oscillator is another momentum tool. Currently, the K value is 59.84 and the D value is 50.12, both rising but not yet in the extreme overbought zone 80+. This divergence where price explodes but the stochastic remains moderate can occur in very fast moves when the indicator's look-back period hasn't caught up. The rising K-line supports continued upward pressure, but traders should watch for any signs of topping out. AFJK is now in what's known as a parabolic or blow-off top phase. This is a period where prices rise rapidly and unsustainably, often ending in a sharp reversal. Such moves are typically driven by speculative buying, short squeezes, or major news events. While the gains can be spectacular, the risks are equally high. It's a classic gambler's market, not a place for conservative investors. If you already own AFJK, this is the time to take profits aggressively. The distance from the 20-day SMA $39 to the current price $99 is dangerous and unsustainable. Consider selling the majority of your position to lock in gains, while perhaps keeping a small moon bag in case the rally continues. Protecting your capital should be the top priority in such volatile conditions. For those considering buying AFJK, patience is key. Do not chase the current rally. The risk of a 50% drawdown to test the $50.60 level is real and probable. Wait for a consolidation or a pullback to the upper Bollinger Band $89 before considering an entry. Chasing parabolic moves is a recipe for losses unless you are an experienced momentum trader. Shorting AFJK at these levels is extremely risky. The ADX reading of 70 suggests the potential for an infinity squeeze, where short sellers are forced to cover at ever higher prices. While the temptation to bet against such a vertical move is strong, the risk of unlimited losses is real. Only the most experienced traders should even consider this strategy, and even then with strict risk controls. The current volatility in AFJK is both an opportunity and a threat. While rapid price swings can lead to quick profits, they also increase the risk of sudden, steep losses. Traders must be nimble and disciplined, using stop-loss orders and position sizing to manage risk. For long-term investors, this level of volatility is a clear sign to stay on the sidelines until the dust settles. Statistically, prices tend to revert to their mean over time. AFJK's current price is a major outlier, trading far above its moving averages and outside the upper Bollinger Band. While outlier events can persist for a while, history shows that such extremes are usually followed by a sharp correction. Mean reversion is a powerful force in markets, don't ignore it. AFJK's move appears to be driven by company-specific events, such as buyout rumors, regulatory approvals, or meme stock dynamics. These catalysts can create explosive moves, but they also add unpredictability. News-driven rallies can reverse just as quickly as they began, so it's important to stay informed and react quickly to new developments. This report is based solely on technical analysis, focusing on price action, momentum, and volatility. While technicals can provide powerful signals, they don't account for underlying business fundamentals. Investors should always consider both perspectives before making major decisions. In the case of AFJK, the technicals scream caution, regardless of the company's long-term prospects. In markets like this, risk management is everything. Use stop-loss orders to protect against sudden drops and avoid overexposing your portfolio to a single high-volatility stock. Diversification and disciplined position sizing are your best defenses against the unpredictable swings that characterize parabolic moves like AFJK's. Fear of missing out, FOMO, is a powerful emotion during parabolic rallies. It's easy to get swept up in the excitement, but emotional trading often leads to poor decisions and losses. Stick to your plan, respect your risk limits, and remember that there will always be new opportunities in the market. High volatility can also lead to liquidity issues with wide bid-ask spreads and slippage on orders. This means you might not get the price you expect when buying or selling. Always use limit orders in fast-moving markets and be prepared for sudden changes in liquidity that can impact your trades. Volume is a key confirming indicator for price moves. In AFJK's case, the surge in price has likely been accompanied by a spike in trading volume, confirming the strength of the move. However, watch for any sudden drop in volume, as this can signal that the rally is losing steam and a reversal may be near. A short squeeze occurs when short sellers are forced to buy back shares at higher prices, fueling further gains. The current technical setup in AFJK with extreme ADX and price action suggests that a short squeeze may be underway or could intensify. This dynamic can create rapid, unpredictable price spikes, so be cautious if you're considering short positions. Parabolic rallies are driven by a mix of greed, fear, and herd mentality. As prices skyrocket, more traders pile in, creating a feedback loop that pushes prices even higher. Eventually, the rally runs out of new buyers and the reversal can be swift and brutal. Understanding the psychology behind these moves can help you avoid costly mistakes. A blow-off top is a classic technical pattern where prices accelerate rapidly before collapsing. AFJK's current chart fits this description with vertical price action and extreme technical readings. Recognizing this pattern early can help you protect profits and avoid getting caught in the inevitable reversal. Let's visualize the parabolic price action of AFJK. The chart shows a steady uptrend that suddenly accelerates into a near-vertical climb, far exceeding all moving averages and technical boundaries. This schematic highlights the unsustainable nature of such moves and the heightened risk of a sharp reversal. The term overbought refers to a condition where a stock's price has risen too far too fast and is considered due for a pullback. In technical analysis, this is often measured by indicators like the RSI, with readings above 70 signaling overbought conditions. While overbought stocks can stay elevated for some time, the risk of a reversal increases the longer the condition persists. A blow-off top is a technical term describing a rapid and unsustainable price surge, followed by a sharp reversal. It's characterized by vertical price action, extreme momentum readings, and a sudden loss of buying interest. Recognizing a blow-off top can help traders exit before the inevitable correction. Mean reversion is the idea that prices and returns eventually move back toward their historical average or mean. In the context of AFJK, the current price is a major outlier, and mean reversion suggests that a correction back toward the moving averages is likely. This principle is a cornerstone of technical analysis and risk management. In summary, AFJK's parabolic rally is a textbook example of a high-risk, high-reward market environment. While the technicals confirm explosive momentum, they also flash multiple warning signs of an impending reversal. Whether you're holding, buying, or shorting, risk management and emotional discipline are essential. Remember, this analysis is for informational purposes only and does not constitute investment advice. Trade carefully and stay informed.